Cornerstone Retirement Partners presents Your Course to Retirement with Grand Rapids Certified Financial Planner Ron Corser and Nolan Gosley. Cornerstone Retirement Partners are planning today for the potential of tomorrow.
And welcome into the program. This is Your Course to Retirement with Grand Rapids Resource for information and perspective on the financial world, helping to add a dose of common sense so we know more about our money and what to do with it in order to achieve our important financial goals. He is Ron Corser, CFP, founder of Cornerstone Retirement Partners. And Ron, always a pleasure today. Going to talk about some big financial issues.
Yeah, we are, Pete, and good morning to everybody listening to today's program. A lot of what we're going to talk about today are things that we've talked about before, but what's going on now in the world around us economically, even worldwide economically, people are getting concerned. They're going to get concerned about, am I going to be okay? Do I have enough money? Will this inflation thing ever end? All those kinds of things that really go into creating a sense of either well-being if you've got a good plan in place, or a sense of, oh my goodness, what are we going to do if you don't have a plan in place? And so, ladies and gentlemen, if you've listened to our programs before or throughout this program today, and we touch on something that's important to you, give us a call at 616-301-2581, 616-301-2581, or go to our website, www.cornerstone-rp.com. Put your information in there. We'll reach out to you. One of the things that we do, and these programs are always designed to do, is ultimately to get people to come and talk with us. I mean, that's why we do what we do, and hopefully we'll continue to have that blessed approach to this. But one of the things that does happen when people come into our office and we sit in that first session and just talk. We talk about the challenges you face, about the things that are important to you, about the things you want to accomplish, family, everything that goes into our life. We talk about those things because a good plan in retirement always is focused around those. And ultimately what we create is an individual plan for each person or each family that's really tailored to the conversations that we had earlier about what's important to you, your values, the challenges. And it's a creation that's only unique to you. Nobody else has one exactly like it. And we think that's the best way to approach our ability to help people, not only through these times that are kind of Alice in Wonderland on street drugs. Sometimes it feels like that, but also just in more normal times. And I remember we have had some of those not so long ago, but it sure feels like a long time ago. So if you'd like that custom designed approach to your retirement plan, listening to today's program or just what I've touched on now, give us a call, 616-301-2581, 616-301-2581, or go to our website, www.cornerstone-rp.com. We'll reach out to you. We'll get you the information you need, and we'll do everything in our power to help you.
Yeah, to get your individual customized and proprietary course to retirement plan, you can get that with Cornerstone Retirement Partners. And all you need to do is pick up the phone and give them a call, 616-301-2581, 616-301-2581. That plan is the result of the conversations. And Ron, in those conversations, I imagine that you hear about and help to gather information to better understand people's hopes, dreams, and aspirations financially. But I also imagine that you hear about a lot of the worries and the concerns about what could get in the way of achieving those hopes and dreams and aspirations. And one that I'm certain you're hearing a lot about this year, because we have gone through what has been the worst 6 months in the market since the 1970s in the last 50 years, but actually hadn't seen a lot of it before this anytime recently. Market volatility. I'm sure that you're hearing a lot of people really concerned and worried about what the market's doing and what's driving this market behavior, and then what can we do about it?
Well, those are great questions, and we always end up talking about those, even when we do reviews with with our current clients. Market volatility is here. And this has been an interesting time. If we go back to March of 2020, when COVID hit and the world got shut down, the market went down 31% in 11 days. It was a drop off the cliff, and everybody sensed it. This year, it's been a little different. I call it a slow motion roller coaster ride, but it's ultimately a slow motion train wreck. What does that mean? It just means that from the 3rd of January this year, the S&P is down approximately 20%. And when I mention that to folks we talk with or our clients, they know it's gone down. They just don't realize it's gone down that much because it's been that slow motion kind of a train wreck in progress. And the downside to all of this is sometimes people get concerned about, oh my goodness, is this going to last forever? Because human beings, we're created individually and we're created uniquely, but we all, me, you, Peter, and everybody, we have a tendency to think in what we call linear thinking. That just means if today the sun's out and yesterday the sun was out, then tomorrow I expect the sun to be out. And if the markets were up yesterday and they were up today, then I expect the markets to be up tomorrow. But we know that that isn't necessarily the case. So one of the things we help, I think our clients and our people we meet for the first time understand is when we're going to design this custom retirement roadmap for you, what we try to do is make sure we cover everything that you've said to us is important to you, and also that we give you the information you need to help understand that the market is crazy today. It's cuckoo. I call it cuckoo world. Alice in Wonderland on street drugs, because we have a lot of things going on. We have inflation. We have the government threatening to raise taxes, which I'm not a politician and I've never played one on TV, but doesn't make a lot of sense to me in this environment. But they talk about it. They talk about printing more money, as if printing more money is going to keep inflation down. So there's a lot of interesting and strange thoughts bouncing around out there, and we try to help folks make sense of them by clearing away the clutter and just getting down to some critical facts, things that we can wrap our arms around and make sense of, and to design a program, a custom designed retirement plan for you that is unique to you, but will work in times of stress like we're in now and good times too. So ladies and gentlemen, we're going to talk about market volatility a little more in depth, but give us a call if this is of interest to you, 616-301-2581, 616-301-2581, or go to our website, www.cornerstone-rp.com. Now, what causes market volatility? Whatever you name is probably going to be in some fashion correct. It's volatility is always with us. When we normally think of volatility, what we think about is large swings in the market on a day-to-day or week-to-week basis. But there's always volatility. Markets go up, markets go down, sometimes just a little bit, sometimes a lot. What causes it? Well, whatever you want to name as a problem probably has something to do with it.
A lot of factors go into that.
Pardon?
A lot of different factors go into that.
Yeah. One of the things that's interesting now is the impact of inflation, not only on our pocketbooks and our life savings, but on the market itself. Recently, the market was trending another hard down spiral, and somebody released some kind of paper that said maybe the government, the Federal Reserve, is not going to raise interest rates quite as high as they proposed, meaning 0.75% or more. So all of a sudden, nothing's changed in our economy. Understand, nothing has changed, but that one little snippet, so to speak, flipped the market from red to green, and it went up a couple hundred points. So it doesn't take much to move markets. And that really is a red flag, I think, for all of us. If a little bit of information will push markets up 1 or 2% in market or down, that's a really fragile market. And we have a fragile market right now. It doesn't take much to go one way or the other. So what does that tell us as investors, as folks that are living in retirement and going to be in retirement? it tells us that we need to create a really custom designed program that's based on what you want, but it's also factored in and around the foundational ideas of what if the market keeps going crazy? What if inflation keeps going up? What if they start printing more money, trying to tell us that if we print more money, inflation is going to go down? That's like saying, I can jump out of a plane without a parachute and successfully navigate my trajectory down to the ground. And I would answer to you, yes, you can do that, but you can only do it once.
Yep.
So there's a lot of things to consider. Volatility is always with us. So the key is to create a plan that builds in some buffers that take into consideration we're going to have some good days in the market, some bad days in the market. We have to buffer ourselves. And one of the things we can do in creating a custom design plan for you is kind of put in what I call some buffers into the different investment strategies you may use, so that ultimately over a period of time, you do have some downside protection, which I think right now is really, really critical.
Well, I think that a lot of people are concerned about it because a lot of people, unfortunately, Ron, didn't have those type of conversations ahead of time. And kind of once we're in the throes of market volatility, we sort of begin to panic and worry of how long this could continue. How bad is it going to get? Is this the beginning of the end? Will my savings even be there or matter? And all of the worries and concerns sort of build on themselves. And then we get emotional about our money. And studies have shown that emotional decisions with your money tend more often than not to be the incorrect decision. We do the wrong things at the wrong time.
Markets are interesting creatures. Markets can go up when everything around us is crumbling. It's always amazed me that it doesn't take a lot for the markets to go up when you look around and say, that makes absolutely no sense at all. But there's a saying in our business that the markets can stay irrational a lot longer than you can stay solvent. Mm-hmm. So what that tells us is you really have to build in as part of your plan the idea that the markets could be a little crazy and that there'll be volatility. Because ultimately, there's a question all of us want an answer to. And I'm going to phrase it this way. Most of the time, when we really get down to talking about values and things that are important, what people want to know, what my wife wants to know when we do reviews, because we treat ourselves as clients, it's a kind of an out-of-body experience for me. But my wife, Nancy, always wants to know, are we going to be okay? Are we going to be okay? And my answer to her is generally, yeah, I believe we will, unless great cracks open up in the Earth's surface and Godzilla comes out of Lake Michigan. Those are things I have no control over. But we've created our own plan. And see, that's the key. We've created a plan for my wife, Nancy, and me that fits us. It's not like a lot of clients' plans I have. I share the kind of plan I have with our clients because I think they should know. But it's based on what's important to us, what our values are, the things we're trying to accomplish for our family. So we have a plan that I think is going to work really well, even if the market continues to be as volatile as it is. And that's the kind of planning we try to help with others. That's what we try to do, is create an individual design retirement plan for you that will work for you, regardless of what everybody else is doing. And you think about this, if you have money in the stock market in some fashion, you have mutual funds in your 401k, your IRA, things like that, there's only three options. There's no more than three. One is the market will go up and your portfolio, which was based on mutual funds and things like that and stocks, it was based on the idea that you will make money if the markets go up. I agree with that. Now, markets can just go sideways for a long time, not go up, not go down, just kind of mosey along, in which case everybody's plan probably is going to do the same thing. But the third key can happen if you have a stock market-based market plan, is that the markets can go down. So those are the only three options: up, sideways, or down. What we try to customize in each individually designed plan is to take advantage as much as we can of what's going up, but also add a buffer into that going down part, because that's critical. I mean, think about this. There's people who have been planning on retiring this year, next year, and the year after. And the biggest fear is that they're going to somehow run into a brick wall, if you will, and the market is going to collapse on top of them, and they're not going to be able to retire the way they want to. To those of you who are thinking that way, or maybe you're looking at it as a very real possibility, do yourself a favor and give us a call, 616-301-2581, 616-301-2581. We can help work through these issues. We can help lay out a plan, custom designed for you, that will help address, if the market goes up, can we have growth? Yes. If the market goes down, can we create a buffer strategy? Yes, we can. If the market just kind of fluctuate and goes sideways for a while, is there a way to perhaps make a little bit of money in that environment? And we can help you do that potentially with different strategies available to us. So if this is important, if it's ringing a bell with you, give us a call at 616-301-2581, 616-301-2581, or go to our website, www.cornerstone-rp.com. That's www.cornerstone-rp.com. Put your information in there and we'll reach out to you and help you.
Again, 616-301-2581 is the number to reach Cornerstone Retirement Partners, Ron Courser, CFP, and get your custom design course to retirement plan in writing, or double check and review and update your current plan. 616-301-2581, 616-301-2581. Ron, as you are having those conversations with Nancy, with your wife, and you are doing so in wearing both hats as advisor and client, and Nancy asked that question, are we going to be okay? And then you look at this market volatility. What is it in your planning approach that allows you the confidence to still say, yes, I believe we are going to be okay, compared to what those that are out there worrying so much about the market are doing?
Good question. My wife and I, even though we're still working, we have built our retirement plan around one simple idea, that whenever we decide to retire, meaning walk away from earning a living day by day, we want to have a retirement income plan that will give us the income we need coming in every month from our different investments and things that will make sure we maintain our lifestyle. It's that simple. Now, it's a little more difficult to do, but the idea is that simple. Our plan is based on creating enough income in retirement so that we can retire whenever we choose to, and have it allocated in such a way in accounts that we don't have to be too concerned about high market volatility and things like that. We will always have the income coming in that we think we'll need going forward. Because one of the things I joke with people, but it's true, I want to live to be 100. And I know a lot of people say, why would you want to do that? I say, well, there's a caveat to that. I want to live to be 100, and I actually pray to live to be 100, but I also want to know that I'm 100, because why would you want to be 100 if you don't know? But I want to see what happens to my kids and grandkids and things like that, and to be able to help them. So that's one of the things that we do, and it's something we do at our firm, that create retirement income plans for people in retirement so that they can maintain their lifestyle and not have to worry about, okay, the market's down 20% this year. My goodness, does that mean I've lost all my money and I can't retire, or I got to go back to work and things like that? So the kind of planning we do is based on kind of saying to self, there's a lot of different ways to skin this cat. Let's take the best of all the worlds, the best of all the ideas, and apply them to you if it makes sense. And if it makes sense, what we'll end up doing is having a custom design plan that not only can you live with, but you can prosper with, that will help maintain your lifestyle, that will give you the income day in, day out, year in, year out, that you need to maintain that lifestyle and to keep the money in the family. I think that's where we really excel. We do create investment strategies that help move this along. We create different kinds of investment accounts for people that help create this income in retirement that they need. But it all is put together in a way that makes sense to you, the client, that makes sense to what you're trying to accomplish, that you can measure, you can see, and you can work with. So if this is important, or if it's kind of touching a soft spot, give us a call, 616-301-2581, 616-301-2581, or go to our website, www.cornerstone-rp.com. Put your information in and we'll reach out to you, because we got a lot more to talk about on this program today. So Peter, I'm going to turn it over to you for right now, and you tell us where we're going to go.
Yeah, well, we do have many other topics, these big areas of concern. We're going to be talking about the concern of running out of money in retirement. We're going to be talking about inflation. We're going to be talking about taxes and healthcare expenses, and kind of bringing all of those things together. Those are top areas. Just a few more moments focusing on this one with market volatility, though, Ron, in perspective, in looking at the way that you and your team at Cornerstone Retirement Partners plan, how is this different than conventional methodologies of planning to provide that confidence even during times of market volatility? If I can ask it that way, how is your style and approach to planning going to be different than what we may have experienced previously?
Well, one of the things that I've been accused of is being conservative. And so what does that tell me? That tells me that I'm probably looking at people's retirement money in the right way, not putting a whole lot of excitement and adventure into it. The idea that, yeah, you can make a lot of money if the market goes up, but if it doesn't, it could absolutely alter your retirement plan. So what we do is we look at different kinds of accounts, places where people can put some of their retirement money. And we try to blend them together that accomplish two things. Number one, that gives them the income they need in retirement, just a little bit for inflation, because they're going to need more today than they did yesterday, and more next year than they do today. And also with the other idea that going for the gusto kind of makes sense if you're in a casino. But what we really need in retirement is some growth, but we need to have some downside buffering in our portfolio. We need to have some way to protect something or minimize the damage of a down market in our portfolio. And so we create and build that into each individual custom designed retirement plan that we create. We're very clear about it. I'm very clear about it. If somebody wants to buy Bitcoin with all their money because they think that's where it's going, we're not the right advisor for you. I'm never going to suggest something like that. But the way we approach things is that we say, look, what we have to do first is get you the money you need in retirement so you can retire. And secondly, we have to make sure that money lasts. And the one way to make sure it lasts is to make sure that you don't have a catastrophic loss. There are ways we can help protect against that. And it just has to be explained. And if it makes sense, we go forward and do it. But those are the two basic premises that we work on, is how do we get you what you need and want, and how do we keep you from losing it all? So ladies and gentlemen, if this makes sense to you, give us a call, 616-301-2581, 616-301-2581, or go to our website, www.cornerstone-rp.com. Put your information in there and we'll reach out to you and help you.
616-301-2581, 616-301-2581. And Ron, I think that's a good segue into the next of the major areas of concern that we wanted to talk about, which is the concern, the fear, and by all means, preventing the reality of running out of money. You just mentioned there that one of the best ways to avoid that is preventing catastrophic losses. Now, I've always heard that proper planning prevents problems, and that seems to be following in that line of thinking that if we can plan properly ahead of time, that we can go a long way, at the very least, in preventing that problem.
Yeah, we can. You know, when we think back, all of us were scarred in some fashion by what happened in 2008, when the financial system worldwide collapsed and everything just kind of blew up. That was catastrophic for a lot of people. Changed a lot of people's retirement plans, made them work longer. Some of them are still working, unfortunately. So one of the things that people can say is, I don't want that to happen again. And I am in full agreement with that. But that doesn't mean you have to put all your money in a 3-pound coffee can and bury it in the backyard. Because you can do that. I mean, you literally can do that, right? And what's the risk of putting in a 3-pound coffee can and bury it in the backyard? Well, inflation will lead away with some purchasing power. Certainly, you go back in 3 years or 5 years. But the real risk is you'll develop some sort of dementia, forget where you buried it, and it's a total loss. So whether we put money under the mattress or in the stock market, there's always a risk there. And one of the key things that we help people understand is the amount of risk involved in every financial decision, every strategy, every proposal. What's the risk? What's the downside? Because the upside will take care of itself if markets go up. But we can control, and we can't control the upside of the market, but we can certainly control the amount of risk we bring in our life, can't we? Absolutely. I mean, I don't go skydiving because I think that would end badly for me. So I can control the amount of risk, and we can as investors too. And that's one of the core strategies, I guess, buried in the retirement plan that we custom design, is controlling risk to the best possible ability that we have, and making sure that everybody understands the kind of risk they're taking and how it will respond. Because we're going to talk about inflation, rising interest rates, and things like that in our next segment, and that has a major impact on the planning process.
Well, again, if you have questions or concerns, if you would like to get your customized Course to Retirement plan in writing that addresses many of these areas of top concern, and certainly they are areas of top concern for you, pick up the phone and give a call, 616-301-2581, 616-301-2581. Grand Rapids savers, investors, proactive planners, you are lucky to have Cornerstone Retirement Partners as your resource there that you can have as your sounding board and as your advisors if you desire to ask questions, to formulate the plan, to address problems and issues ahead of time so that they don't impact your financial outcome and maybe don't become problems or issues at all. That's what the proactive planning process and the Course to Retirement plan are all about. Pick up the phone, give them a call for a conversation to ask a few questions or to set up a convenient time for you for that retirement review, that planning and investment strategy session. 616-301-2581. That's 616-301-2581. Quick break. We'll come back. We'll talk more about the areas of top concern on the minds of savers and investors like you right after the break here on Your Course to Retirement. And welcome back into the program as we continue the journey on Your Course to Retirement with Ron Courser, CFP, Certified Financial Planning Professional, founder of Cornerstone Retirement Partners, Grand Rapids, your resource for perspective and guidance in the financial world. A common sense approach to planning with your money for your financial futures with the perspective of your goals in mind, making sure that each plan is custom designed. That Course to Retirement is available to you, ladies and gentlemen. The written plan, the proprietary planning at Cornerstone Retirement Partners. All you need to do is pick up the phone and give them a call to get the conversation started. 616-301-2581, 616-301-2581. And we are talking about some of the most important topics, the top areas of concern on the minds of savers and investors with Ron Corser, Certified Financial Planner, CFP, on today's program. Ron, one that we are certainly hearing a whole lot about. We're experiencing it each and every day. Every time we leave the house, or even if we stay at home, it seems like inflation, the cost of living day to day for everything that we are paying for is going up. Big area of concern. How do we address that in our financial lives? How do we prepare ourselves for paying more for things into the future?
Well, it's not easy, that's for sure. I'll tell you an interesting story that I had, and here's an approach that perhaps makes us just a little different. And this was an existing client that came in. They have some younger kids, 12 and 10. He had just gotten a little bump in pay, and he's very grateful for it. And they were thinking that perhaps they would want to start increasing some of their investment programs that they have. And I asked him a couple of questions. And the first question I asked was, how much more are you spending, do you think, taking care of your kids this year than last year? And they just kind of went, oh my goodness. I mean, the kids are in soccer camp. They have all these other things. Plus 10-year-olds and 12-year-olds can eat their way through a whole farm in about a half a day.
I was thinking that you were talking about the 30 and 40-year-old kids that parents are still taking care of.
They'll eat more too. So we got into a conversation about what was the purpose of the money that they're going to have, the extra money. And they indicated that it really was to make things better for them. So one of the things I suggested is, before we try to figure out how to invest that, why don't you just sit back for the next 90 days or so and see what happens to your food bill, your gas bill, your electric bill? Because it was just my opinion that those things are going to become increasingly more expensive. The good news was he got a little bump in pay. The good news on that will be that if things get out of hand, even more so with food, gas, electric, what have you, they'll be in a position to keep moving forward and be able to handle those. And my suggestion was, let's take a look at this in the middle of football season, about October, and see if there's some extra money there that we can invest. And my suggestion to them was going to be to continue to put more and more money whenever possible into their Roth IRA accounts. Why would I suggest that? Because ultimately, in addition to inflation and rising cost of everything, down the road, it's just my opinion, taxes are going to go through the roof. They have to. We got a $30 trillion debt. Social Security, Medicaid, Medicare too, need funding. Government spending money like there's no tomorrow, and for them there probably isn't. So my suggestion was, let's just see what happens, and if we can, let's put some money into a place where it won't be taxed down the road. His response was, well, do you think they'll change the rules on IRAs? My response was, no, they're not going to get you that angry. But what they may do is they may say, effective January 1st, for example, Roth IRAs are eliminated. But if you have one, you can keep using it. So that was the approach I took. Because even when people are working, they need a certain level, in my opinion, of comfort in their life. A certain level of, okay, we've got this. We can put the kids into soccer camp, or we can go take a little vacation, or we can, buy a real piece of beef if we have to cook out on. So I think part of it is how do we combat inflation? We do it by making sure that whenever we have excess money, we have it in a place where we can use it to pay increasing bills, utility bills, and what have you, food bills. Now, if you'd have said 2 years ago, asked me that question, I would have responded to you probably much differently. But even in our own family, Nancy and I, we see just with us, we don't have kids at home. We see the cost of doing everything we need to do just to live. In our business, we see the cost going up. So it's one of the things I say, if God's blessed you with a little extra money, first of all, let's see if we can just make the family a little more secure and safe, being able to pay the bills. And then if there's anything left over after that, we can invest it. Because when it comes to inflation, ladies and gentlemen, boy, there's going to be people get mad with what I'm about to say. There is very little the government can do to bring down inflation. Very little. Now let's go back. Some of us are old enough to remember when Jimmy Carter was president, Ronald Reagan was president, coming into presidency in 1980. We had inflation somewhere around 15%. They fixed it. They fixed it. How did they fix it? They raised interest rates to about 17%. And yeah, in about 18 months, man, inflation was a dead doornail. But what else happened? We had a profoundly deep recession. So the issue with inflation now, ladies and gentlemen, is this, is that the Fed wants to change it with raising interest rates. We have a little over 9% inflation now. Taking the federal funds rate from 2.5% to 3% when inflation is at 9% really isn't going to do much. But if they raised it to about 12%, it probably would. But that would create a whole other set of circumstances for everybody, including some political things to think about. So they're between a rock and a hard place, which leads me to believe that inflation is not going to be tamed in the near future, no matter what the talking heads on TV say.
Ron, the policy makers making those decisions, being in that proverbial rock and hard place conundrum, doesn't that place all of us individually in that same hard position of being between that rock and the hard place? In that our last conversation, the first segment of the program, was pertaining to market volatility, and so many are worried about losing money, but the solution, on the other hand, is sit money in cash, where we lose money anyway due to inflation.
One of the ugly truths about inflation, particularly when you get into the runaway like we have now, is there really isn't a safe place to go to hide. And that's just a simple fact of life. But there are certain things you can do to try to help minimize the impact on it. What's one of the things that we're suggesting people do? One of the things we're doing now, and this is just a suggestion, it's not something that says here's an investment solution. But we have talked with clients individually about buying I bonds. Why? Because they've got an interest rate right now of 9.6%. What's inflation? 9.1. That's some pretty good math, isn't it? Now, unfortunately, you can't buy enough of these I bonds to satisfy you, but you can do a little bit. So that's just one of the strategies you might think about using in your portfolio, in your retirement plan or your investment plan, to try to kind of tamp down, if you will, the impact of inflation, because we're going to have it. Now, the other part is this, is that as inflation goes up and the Federal Reserve continues to raise rates on CDs are also going up. Now, they're not anywhere close to 6 or 8%, but they're a whole lot better than they were a year ago. We've had people tell us that you can get a CD for 3% now. But I also know this, that there are some short-term, what I mean 3 to 5 year annuities. And again, this is not an investment recommendation. It's just exploring different options that are paying anywhere from 3.5% to 4%. So there are places that a good advisor can help you explore to see if it makes sense to add whatever that item is to your investment or retirement portfolio to help mitigate the risk of inflation and of interest rates. So it's an important thing to consider. But here's something I always ask people to consider. We have been told in this industry that the best thing you can do to fight inflation, the stock market is your best solution. All right. Now, think about this. If you had $100,000 on January 3rd, it was an S&P 500 fund. The market's down about 20%. That means now that fund is down $20,000. Now you have $80,000. You started with 100 6 months ago or so, and now you got 80. Here's my question to you. Have you kept up with inflation?
No, because inflation is, in fact, compounding on top of and in addition to those losses.
So therein lies one of the interesting things to consider. You might call it a conundrum. I'm not sure. But yes, inflation and the stock market can be working together, so to speak. But when you have a giant correction, losing money does not keep you ahead of inflation. So the idea that perhaps we can create a strategy that's used as paying dividend paying stocks and things like that might make some sense for a portion, just a portion of your portfolio. But there's got to be other ways to buffer the portfolio to protect you, because here's what's going to happen. And we know this. We know that the market always comes back. We know that. And we know that ultimately interest rates always come down. We know that. Historically, they both happen. What we don't know is exactly when that's going to happen. So we have to do two things. We have to live long enough to experience it. And secondly, we have to create a retirement program, design one for you that buffers the downside, that gives you the best opportunity to hold on to as much of your retirement money, your investment money, your life savings as possible, to give you an opportunity to take advantage of what's going to happen down the road. Because the markets will come back at some point in time. Interest rates will come down at some point in time. We just don't know if it's going to happen in the next 6 days, 6 weeks, or 6 years, but it will happen. And one of the great strategies then to take advantage of that is make sure you have what we might call some free cash flow in your retirement plan or your life savings to take advantage of those movements that go up.
Do we need to build that cash flow in ahead of time, be proactively planning and preparing for events like this before they actually arrive? Or is there something that we can actually do right now in reaction to these events to add that additional cash flow, Ron? Like
you can do both. I
Okay.
have clients now where we have specifically, and they're at their choosing, set aside cash in their retirement account, in their brokerage account, waiting for an opportunity. And obviously, doing reviews, talking with them by phone, the opportunity from our point of view is not right now, but it's going to happen down the road. And the other thing we can do, and we've done it, is to invest in things that can be market related, so to speak, but have some downside buffering to them, meaning they can minimize potential losses. It's something to explore. So there are a couple different ways to approach it. But the bad part, and it happened in 2000 and again in 2008, is that people had their portfolios designed to do just one thing, and it's always go up. And it didn't go up, it went down dramatically. And then when the markets did turn around, they really didn't have any capital or cash to redeploy to take advantage of the upside. So that's all part of the planning. That's a great piece, if you will, and just a piece of the individually designed program that fits you. It fits you as the client, as you as the human being, you as the one who's got all the retirement money saved up, looking forward to retirement one day. You're the one that we can custom design a plan for that will give you the best opportunity and potential to succeed, no matter what kind of environment we're in. So give us a call. 616-301-2581, 616-301-2581, or go to our website, www.cornerstone-rp.com. That's www.cornerstone-rp.com. Put your information in there. We'll reach out to you and help you.
Ron, there is a saying in the financial world, and it probably applies other places in life, but I think it was made famous in the financial world, that history does not repeat, but it often rhymes. And you sort of made mention and alluded to that era of the late 70s, early 1980s. We were experiencing rising inflation, much higher costs. The response from the policymakers was to raise interest rates. And as a result, the market had several very challenging years, and we did enter into a recession. And it seems like that trend is eerily reminiscent of what is going on right now. Here's where I think the biggest difference may lie, is at that point in time, most of us were net savers And yes, there was some investment, but we were not trained to be market and Wall Street investors by and large until the prevalence of the 401k. That's where the Main Street American really became a Wall Street investor. And in addition, we were not as heavily reliant on debt in our day-to-day lives. So now, as opposed to back then, we've generally got more at stake as far as our life savings being subjected to the risk and volatility of the market. And if they raise interest rates, instead of being a positive for savers, that could be a factor that works heavily against us if we have any kind of debts.
It really does. We have become a debtor society. I'm reminded of a really neat story, and if I can just share that with you. My mom, her idea of really serious investing was to get the Detroit news. We're from the Detroit area at the Times, and see which bank was offering the highest interest rate on CDs and who was offering an appliance, a toaster, a waffle iron, or something. That's what she did. At one point in time, prior to her dying, she had 17 different accounts in about 14 different banks, even though they were some of the same, branch offices. She called me one day. Now, my mom she hated voicemail. And so she would, if I wasn't there, she'd, hang up. She called me and said, "Son, you got to call me quick." And I thought something was wrong. So I called her and I said, "Mom, what's up?" She said, "You're not going to believe this, son. I got a 5-year CD that pays 14% and I got a toaster." And I started to laugh and I said, "But Mom, inflation's about 17. And in her own style, she says, "I don't care about that stupid inflation. I got a 5-year CD paying 14% and a toaster." So what happened? This is when they really slammed down on the whole interest rate world. 2 years later, inflation went away and she had 3 years left on a 14% CD. And I thought, you know what? My mom is smarter than I've ever given her credit for. So even in the darkest of times, there are things that perhaps can happen that we can take advantage of. Now, why was my mom able to do that? Because my mom had cash. She had liquid cash, and she was able to take advantage of that. And that's kind of one of the secrets now going through this time that we're going through. It's not going to last forever. I just don't know how long it's going to last. But it seems to make sense to be prepared for the turnaround, whenever that might be. 2 years, 3 years, I don't know how long it's going to be. Could be 3 months. But be prepared for that. And to be prepared financially is to minimize debt if you can do that. But secondly, keep some cash money somewhere in your brokerage account and your IRA. It's not a bad thing at times to hold cash to get ready for the next big thing, so to speak. So if this is making some sense, ladies and gentlemen, give us a call. We can design for you a custom portfolio with retirement plans that meet your values, meet your goals, do what it is you want them to do, and give you the best chance of success, the highest probability of success. So give us a call, 616-301-2581, 616-301-2581, or go to our website, www.cornerstone-rp.com. Put your information in there. We'll reach out to you, get you the information you need so you can make great decisions.
And Ron, that toaster that she was gifted for opening that account probably still actually working around and ticking, as opposed to today's modern appliances that I think have an internal kill switch to make sure that they break down after 2 or 3 years.
Well, actually, we had that toaster for a long time. That was one of the few things she never gave back as a wedding gift to somebody. So, because it was a big 4-slicer. It was pretty good.
A crude segue, but speaking of things breaking down over time, Ron, one of the last things that we wanted to get to on today's program was those healthcare costs that become potentially astronomically high during our retirement years in particular, and what to do about them, how to plan and prepare for them as best as possible. You know, Ron, I think this is that topic that everybody would prefer to ignore, if at all possible. But the problem is that really that's not the best thing to do with this. But would you agree that this is kind of the unaddressed 800-pound gorilla in the room of financial and retirement planning?
It will be. It will be over the next 20, 25 years. It's been said that healthcare costs and taxes are going to be the two biggest costs in retirement. I absolutely believe that. Here's one of the ways our firm, I think, really addresses this well. We've talked about it before. My wife, Nancy, has a whole team that deals with the healthcare arena. She does the Medicare stuff. And if you're pre-65 and you've lost your job or you need coverage, her team is licensed to just kind of search the world over for the best kind of healthcare plan for you. So it's something that, as a firm, Cornerstone Retirement Partners absolutely thinks is critically important to include in all the planning that we do for people. So we can do it strictly on, you're getting into the age 65, you're going to become, as I joke with people, a ward of the state. It's not too bad. But you're going to be Medicare eligible. What's the best plan? And then what kind of medications do you take? Because not all plans are the same. I mean, they have to offer, all the Medicare plans have to offer the very same thing. All the Medicare Advantage plans, depending on zip code, kind of do too. But then you have this whole issue of how healthy are you? What kind of medical things do you have going on? What about your prescription costs? So it's not a cut and dried, just talk to Joe Namath on TV and have him do this. My wife Nancy's team is absolute experts on this. So if this is important to you, we can help. It's part of what we do to custom design a retirement plan that makes sense for you. And healthcare has to be part of it. The other part is the long-term care issue. We know down deep inside that if we live long enough, we're going to need some sort of custodial help. We know that. What we hate to think about is going into a nursing home, because we have this idea that it's like one flew over the cuckoo's nest. There's going to be crazy people in there screaming and yelling. They're going to hose us down twice a week, whether we need it or not. It's going to be a terrible experience. But planning for long-term care, particularly now, I mean, it's kind of a long way. You can get great care in your home for a whole lot less cost than having to go into a nursing home. But it requires planning. It requires somebody to kind of come by you, walk by you, side by side, to take you down through the maze called healthcare planning, so that you can see what your real options are that make sense for you. We've got clients that have approached the long-term care part of it by saying, I'm going to take out some plan that will provide for me if I stay in my home. And I'm good with that. And that makes great sense. That really does. There's also a lot of free government programs out there that we know about and we can help people with. So this whole idea of healthcare planning is a little more complicated than it might seem, but Nancy's team is great at uncovering different approaches to help individuals. Sometimes they work a lot harder than you would imagine to make sure that the client gets the best possible service and the best possible plan. Well, so if this is important, give us a call, please. That's 616-301-2581. We can custom design a plan, yes, that will give you the income in retirement you need to stay comfortably retired. We can design a custom plan for you that will give you the best possible healthcare coverage, given whatever's going on in your life and whatever the options are outside the world. We can help you with those things. We can create investment plans for you that can preserve as much, buffer as much, if you will, so that at some point in time, when this nonsense turns around, you'll be able to take advantage of it. So if this is important, give us a call, please, 616-301-2581, 616-301-2581, or go to our website, www.cornerstone-rp.com. Put your information in there. We'll reach out to you and give you the information you need, again, to make great decisions for yourself and your family.
I was going to say, Ron, no offense to Broadway Joe Namath, nor Mr. Dynamite Jimmy Walker, but I've talked with Nancy on this topic, and I would trust her guidance on it much more than either of those dynamite individuals saying it's going to add money back to your Social Security. Nancy knows her stuff. She's in the field. She's in the works with this day in, day out, helping people select the best options for their individual situation. I don't think Jimmy or Joe are really getting into the weeds of all that goes into these important decisions. So Nancy's always a fun show to do, to talk about the healthcare side of planning specifically. And I know open enrollment comes around late in the year, so I imagine we'll have another conversation with her. But those previous shows, they're still out there in the archives at cornerstone-rp.com. If you've got questions, ladies and gentlemen, I encourage you strongly to go listen to any of those programs in particular. But Ron, this again, it's one of those things where we'd rather duck our head in the sand for a number of many reasons. I think people have sort of opted for that approach, but that leaves us still widely exposed to the potential for catastrophic healthcare expenses, and we really do need to explore our options. And in fact, there are some very good options, reasonable options, very palatable options available to address some of these potential costs and concerns.
There are. And the other thing I tell folks is, when I hear this a lot, is say, well, if we have to go in the nursing home, we're going to go broke because we have to spend all our money. That simply isn't true. That simply isn't true. Now, the whole Medicare, Medicaid, that whole issue, that's a place for important people who are specialists. And when it comes to Medicaid planning, we do not do that. We know how to help, but what we do is we employ an elder law attorney. We can introduce you to 2 or 3 of them, see who you like. They're all very, very good at what they do, and they know the rules. They can help preserve as much of your estate as possible if, in fact, Medicaid is the last option for somebody. So give us a call, 616-301-2581, 616-301-2581, or go to our website, cornerstone-rp.com. There's a lot of ways we can help. We can design a custom plan for you that will include everything we've talked about today. How do we deal with market volatility? How do we deal with inflation and taxes? What about this whole healthcare thing going on? What are we going to do about that? There's a lot of things going on in our lives. Take some time to spend with us, and we can help you create a custom plan that not only will make great sense to you, but it'll give you the highest probability of success going forward. So give us a call, 616-301-2581, or go to our website, www.cornerstone-rp.com. Put your information in there and we'll reach out to you. So ladies and gentlemen, we've come to the end of our program. I hope it's been a good, informative time. I've enjoyed talking to you about it. I enjoyed reminiscing about my mom. That was fun. So Peter, take care and bless all of you on your way to church. Go to our website, listen to the blogs from previous weeks. Give us a call. Take care. Bless you.
Tune into Cornerstone Retirement Partners' full radio program, Your Course to Retirement, Sunday mornings at 9 o'clock at News Radio WOOD, or visit cornerstone-rp.com for many valuable resources, including those mentioned on this show and other great episodes of Your Course to Retirement.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor.
Ed Slott's Elite IRA Advisor Group is solely an indication that the financial advisor has attended training provided by Ed Slott and Company, passed biannual examinations on material covered at conferences and in webinars, and met other membership requirements, and does not constitute an endorsement of any kind. Ed Slott's Elite IRA Advisor Group members pay a fee for the educational programs that allow them to be included in the Ed Slott's Elite IRA Advisor Group. Membership does not guarantee investment success. Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services.
Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. products. They do not refer in any way to securities or investment advisory products. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals or growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the products featured